Hey, what's up, guys? It's Sebastian Boyer, the approved guy, and today we are going to have a special guest, Denise Clemence. She's the Vice President, Business Lending Specialist over at Dogwood State Bank. She is an SBA Pro. Her nickname is the SBA Queen. She is awesome. She has all the details and information that you would ever want to know about SBA loans, SBA 7A loans in particular, is what we're going to be talking about today. And Denise is going to break it down. So if you have any questions, if you've ever had any inclination to want to apply for an SBA loan and what it's all about, you're about to get the inside scoop. So let's get right to it. So how are you today, Denise?
I'm doing wonderful. Thank you for asking, Sebastian, and thank you for having me.
Thanks for being with me. I really appreciate it, and so does my audience. So can you just tell me a little bit about your background and how you've gotten to where you are now?
Pretty diverse, a little bit of a story, but I think all the people that I work with have sort of the same story. Went to college for nursing and used to take care of people's bodies and got a little discouraged through the politics. And although I love healthcare, I really just didn't want to take care of people's bodies anymore. So ultimately, I ended up taking care of people's dreams. So I work with entrepreneurs, sort of a healthcare advocate for them in doing small business administration loans. It's the only type of loan I do. So I'm more focused on the business entrepreneur and the process of getting them to a point in health where they can achieve their SBA goals, their small business goals, and their success in life.
Awesome. That is awesome. And so the name of the bank that you're with now is called Dogwood State Bank, correct? And
Yes.
How long have you been with Dogwood State Bank?
I've been with Dogwood just under 2 years. We're relatively a new lender, but we are a preferred lender throughout the United States. So from my home, I've worked at home for over 20 years. I am able to work with entrepreneurs all throughout the continental United States of America on achieving SBA loans.
That's awesome. So tell me just a little bit about, first, if you could kind of explain the difference between maybe SBA itself for the audience, and then your bank, I guess, working with and in conjunction with SBA. What's the difference? Is there a difference, or was there a red line or anything there?
There's always differences, and most of the differences are in our hearts because it's who we enjoy working with a little bit differently. So small business administration loans, and the small business administration was created way back. So the loan programs were created in the 1950s, and they're still alive today. They morph on a general basis sometimes every year. Over the past year, they've morphed a little bit more because of the response to COVID, but it is derived, the rules and regulations, from Congress, and then they are trickled down through what we call a standard operating procedure book. And those are the base rules that we must follow for not just us, but every SBA lender, whether it's Bank of America, Regions, Dogwood State Bank, or whoever it might be, they're all following the same base rules. Once we follow those rules, then we have our banking institution rules that go on top, which can be a little bit more constrained, depending on the banking institution. And the difference working with Dogwood State Bank, which is more of a nationwide we're a bank lender, but we act like a non-bank lender versus a large bank such as TD, Bank of America, Truist, who are your larger regional banks, more like Regions Bank in the Southeast or Citizens in the Northeast. They also supply loans, and the difference is going to be the size of the institution, the size of the group that's dedicated to SBA, if there's an SBA dedicated group. And then of course there's the difference of who's employed there. And then the only other difference would be what we call GP versus PLP. GP is general processing. So some lenders, when they get an SBA loan, they approve it and they mail it directly to the SBA. As a preferred lender with Dogwood State Bank, we are given the authority under the SBA through audits on a yearly basis to approve, underwrite, and close our loans, as long as it's done under the standard of the standard operating procedure book. So hopefully it makes it move a little faster. But it's not always the case. It just depends on the loan. Everything's permanent.
So tell me just a little bit about, so you service nationwide, USA, your bank, yes?
Yeah.
And Tell me first, I guess, some of the basic requirements, and then maybe some of the things you look for and restrictions when you're looking at a new SBA applicant. And then we'll dig it in even a little bit more from there.
Okay. So SBA, they have a lot of different programs, everything from using SCORE and the SBDC in your local area for low cost or free consulting. I just work on the loan products. So the primary loan products under SBA are 7A and 504.
Okay.
For the purpose of this, I'm going to more focus, I think, on the 7A because it's more broadly used.
Okay.
It's the loan program that can service every use of proceeds, whereas the 504 is restricted only to commercial real estate.
Right.
So it can't be there for startup capital, etc.
Right.
So 7A is a very diverse product.
Wait, pause. Did you just say that SBA 7A can fund a startup?
It can fund a startup.
Okay, sorry to interrupt.
Funding 2 of them right now, and more to work on.
Awesome. That's great news for everybody. Go ahead. Sorry to interrupt you.
So the SBA 7A loan program is applicable for commercial real estate.
Okay.
You can also use it for tenant build out, whether it's for the piece of real estate you're purchasing or even for a rental. So like I said, when you're looking at those franchise startups, we a lot of times, most times, include the build out for the commercial real estate. So it could be any kind of franchise, whether it's a restaurant, a daycare, you name it. There's franchises out there for everything.
So they don't have to own the property to be able to use an SBA to build out the location?
Not on a 7A, they do not.
Okay, good news. That's good.
And you have the equipment use. So we can either purchase new or used equipment, and then furniture and fixtures. So anybody, like if you're an optometrist, you need the special cabinets for displaying of your glasses. It could be a hood for a restaurant. It could be a backhoe for a landscaping company. So any kind of equipment that's used for the company.
Okay.
And then of course, working capital, which everybody gets all excited about working capital. I'm going to get cash back.
Right.
The difference in that is the SBA does regulate. We need to know where that money is going, and we're most likely going to distribute that money to that vendor.
Understand.
We're not just going to hand the business owner $500,000 in cash. We're going to have to validate to the government where that money is going and back it up with documentation. And then, of course, the SBA allows the roll-in of all interim interest and closing costs into the loan. So the borrower would typically pay a portion of it, and we roll the rest in.
I understand. Now, when you're looking at a new applicant, is it required that they have a business plan, or is it recommended that they come in with a business plan? What do you prefer? Or again, is it required, or is it just something preferred?
So on the majority of loan applications, a business plan is required. Okay. So anytime you are buying a business, starting a business, or expanding a business, we are going to be, the SBA requires, it's not just us, but the SBA requires a business plan. Yes, of course, it's best for a borrower to come to me with one so that I know exactly what they're looking at.
Right.
If you have an idea, that's great. But until it's put on paper, it's just an idea. It's not a plan. And we need to see a plan of what it's going to take to get you to the success you want. And a well thought out plan is always considered highly.
Now, let's say someone does come without a well thought out plan in writing. Are they able to develop that in their application process, or they would have to go set up a plan and then come back?
Sometimes it just sort of depends on the scenario. Sometimes you're working on it with them, explaining to them the different parts that need to happen. If they need a full plan and they haven't started and they're uncomfortable, I typically refer them to the other SBA service providers, which is the Small Business Development Center or SCORE, who will actually work with them one-on-one, because I cannot write a business plan. It's not my business, and I'm underwriting the deal, so it would be a conflict of interest. So therefore, I would set them up with somebody. Some people pay for it. Some people do it on their own. I do find the best ones have a lot more participation by the business owner and input. I think they're more accurate, more true. And through the process of any loan, the SBA requires us to do a one-on-one interview with the borrower. So the underwriter, it doesn't matter what bank you work with, they're going to call you. So if you don't know what's in your business plan, it's not really going to look very favorable.
Right. Sure. So, okay, let's go back. So tell me, what is considered a startup? You know, a year in business, 2 years, like they just formed yesterday?
A
What's
startup in business, according to the Small Business Administration, is any company that has less than 2 years tax returns.
less than 2 years? Okay. And then
So if
is the
you started,
criteria going to change after the 2 years to qualify?
does it change after? Well, then you're an existing company, so we can look at historical cash flow.
Right.
If you do not have 2 years of historical cash flow, then we look for projections, which is what you would consider more of an expansion startup scenario.
So if it's a startup, are you looking more at their personal income and financials, and then if they're an existing business after 2 years, are you then going to be looking more at the business financials, or a combination of both?
It's always going to be a combination of both.
Okay.
I always like to teach off the 5 C's of credit.
Mhm.
And really, you could sort of chunk it down to 4 because hopefully nobody goes for the 5th.
Mhm.
So every commercial loan is graded by the 5 C's of credit.
Right.
The difference between a conventional loan and an SBA loan is what we view as the most important, what we prioritize most. In a conventional loan, they prioritize collateral. So they want to see real estate. That's their big thing.
Right.
That falls to number 4 in an SBA loan.
Okay.
In an SBA loan, it's cash flow. So the cash flow is derived by the historical performance of a company if they've got 2 or more years,
Mhm.
and or the projections and whether or not they are validated and believable.
Okay.
So cash flow is first, and then that's followed by credit and character,
Mhm.
which are 2 things that are intertwined.
Mhm.
Those involve the character and credit score of the borrower, each borrower, like the guarantor, the sponsor,
Right.
the business owner. So it covers everything from, do they have the liquidity? Where are they getting their equity injection? What's their credit score? How much debt do they have personally?
Mhm.
Do they have outside income to pay for it? Do they have industry experience? Does a franchise mitigate the industry experience? Who are the consultants they know? Did they grow up in the industry? It just, credit and character is such a big, they're 2 big pots
Right.
in this piece of it. And then last in the SBA loan is collateral.
Mhm.
And the reason that we move collateral to the very end is because it's mitigated by the SBA guarantee.
Okay.
Because
Understand.
when we do a 7A, we're
Mhm.
going to have typically a 75% guarantee, and that mitigates the lack in collateral.
I understand. Okay. So now, what are typically kind of equity injection are you expecting from a new business, and then post closing liquidity? What are you looking for cash on hand to really have a strong candidate?
That's a really great question, and thank you for asking it because people get this very confused. The SBA has an equity injection requirement of 10% on pretty much every deal out there, whether
Okay.
it be a business acquisition, acquiring commercial real estate, whatever it is. There's exceptions when you're doing a refinance of existing debt. There's an
Mhm.
exception of a pure expansion of just like inventory and stuff like that. It may not be required to have the full 10%. Most lenders, not all, but most lenders, when you're doing a startup or a business acquisition, they look for a little bit more equity injection to help satisfy the high risk based on the transference of a business from one person to another.
Sure.
And that would be not on the real estate portion, that's more on the working capital
Mhm.
and the startup side.
I understand.
When you have a franchise that's proven, sometimes that can mitigate that
Mhm.
20% down to a 10%. So it just depends because most lenders grade, shall we say, for a better term,
Mhm.
franchises. So a
Okay.
franchise such as Domino's or the big guys, Kids Are Kids.
Mhm.
Those have more than 50 locations versus somebody who just has one location,
Right.
and it's not really a proven concept as a franchise. So therefore, they would look at that more as a ground up startup.
I understand. Okay. So then that's going to be the equity injection. How about post closing liquidity?
Well, SBA guidelines ask for 6 months of post closing liquidity of principal and interest in the bank following the closing.
Okay.
And that can't be given by the use of proceeds.
Right.
And if you think about it, what lender is going to give somebody a home?
Right.
Let's say they want to buy a $100,000 home and they only have $20,000 in the bank.
Right.
They're not going to let them put all $20,000 in the bank in on that house and leave them with nothing not to be able to handle their daily bills
Right.
or any kind of accident that might happen or mishap. So the SBA is no different than buying a home in that aspect.
Right.
We're looking for some cushion in the bank following.
So I kind of shifting, and I'll come back to this, but this just came to my mind. What kind of, an SBA loan, what kind of interest is on an SBA? Is it simple interest? Is it amortized interest? How does that work?
So SBA derives the terms of an SBA, of a SBA 7A loan. So commercial real estate is amortized 25 years, whereas everything else is amortized 10 years.
Okay.
Unless it's pure working capital, we're supposed to actually do it at a 7-year term.
Okay.
And then the interest it's a fully amortizing loan, no balloons, no calls. Nobody was ever going to do anything like that to it. And then the interest is based off of Wall Street Journal Prime plus 2.75 is the maximum interest rate. It would be up to a lender to be able to pull that rate down. I don't know many lenders that go out and say, we're doing Prime plus 1. It's usually based on the strength of the deal that would pull the rate down. So if you bring me a great deal and the guy's got the girl, the business owner has a 800 credit score, and they've got direct industry experience, and they have outside income, and they have full equity injection, and they've got 6 months of post-closing liquidity, and there's a little bit of collateral, and it's like a no-risk thing, I could possibly move that interest rate down. But if you're bringing me somebody that's got a 580 credit score, maybe filed bankruptcy, and it's a brand new startup of a brand new concept that they've never done before, and it's zero collateral, the bargaining power sort of loses. So the interest rate's based on risk.
I understand. How about credit? What are the credit requirements, credit scores, personal credit and business credit?
Personal credit is based on the guidelines of the bank. So I think most banks, including us, the low end is about 680. Of course, there's always an exception based on some kind of life-altering event that may have happened. You find all kinds of things out there. So things can be excluded and looked at beyond there. It's just an exception to the rule. And then, of course, bankruptcies typically need to be 7 years in age.
7 years. Okay.
7 years.
Okay. Does business credit ever play a role, or make it better for the client, especially for an existing business after 2 years, 3 years?
For an existing client, it can help a deal look a lot better. Typically what happens in the back room is they will take the industry standards and they compare them against the existing business. That will strengthen a deal more than per se the business credit score. If they have a bad business credit score and they're not paying their bills, we're going to take that into consideration as well. But we really go a little bit deeper into the underwriting.
I understand. Okay. Now, what are the kind of the ranges of funding that would be available for both startups and existing businesses looking to use an SBA loan to grow their business?
Are you speaking dollar amount?
Yes. Yeah. The approval amounts, like what would be the amounts that they can qualify for?
So just keeping on the 7A loan program, any loan that's under $350,000 is classified an SBA Express loan. It's an SBA 7A, but it's on the smaller scale. Those loans, they're a little harder to come by. I think there are certain individuals that specialize in them because there's so much more work that sometimes is involved in a smaller loan. And those loans are scored on the SRSS score. So if your SRSS score is below a certain value per the SBA, it cannot be approved. Otherwise, the 7A loan program goes from $350,000 up to $5 million.
Up to $5 million.
Yeah, $5 million, and you can do as many as you want to get to that $5 million guarantee.
So you can have more than one SBA loan as long as you don't go over $5 million in total SBA loan notes.
On the 7A loan, yes, that is true. So I've done multiple loans for the same individual through the years as they've grown their company or bought and sold companies.
Would there be a benefit of just consolidating? Is that possible, or is it they would just keep them separate?
Unfortunately, you cannot refinance an SBA loan with another SBA loan.
But
once you would have to close every deal all at one time to secure it in one loan.
Understand. So they would just have different terms depending on when they started
And depending on the use.
and use.
Yeah, so if a gentleman buys a business, but he's leasing the space, then that's a 10-year loan. But if he turned around 3 years later and buys another business with real estate, and that real estate majority of the loan, that loan's 25 years long.
Understand. Okay.
So it's all based on the use of the proceeds that are given.
So that leads me to a question. If I'm an individual and I'm starting a business with under one business entity, and I get an SBA loan, and let's say I'm at that I'm there at that $5 million mark, and I'm starting another business. Can I get another SBA loan for another business, or am I tapped out as an individual?
Nope. So the guarantee allocation is per guarantor, not per business.
Okay.
So you can use it. In fact, last year I closed a loan for a gentleman who has 2 SBA loans for daycares. And this was his second SBA loan for an assisted living facility.
Okay.
So he now has 4 SBA loans in 2 separate industries.
Understand. But that would be capped out at 5 million total.
His total will be 5 million.
As a guarantor, because he's the personal guarantor.
Exactly.
Got it. So let's talk about guarantors. So if we have a guarantor and they maybe need a little help, can they bring a co-signer to the loan, or is there any way someone can bring additional parties to the loan to help strengthen the case?
So if they're a partner in the company and they're willing to be a guarantor on the loan, then absolutely it can. It does not always mitigate negative actions within the file. It just depends on what it is.
Yeah.
So you're buying say we're going to buy a hotel, and the gentleman who wants to run the hotel, let's say he's got a 500 credit score because he filed bankruptcy last year. Maybe he went through a divorce. It was a really rough time. If he has somebody that has a really good credit score but doesn't have any experience, it's sort of a weight thing. What is, it would be a bank decision and credit manager, whether or not that person would mitigate the downfall of the other. And of course, like I said, remember, we always look at cash flow first.
Right.
So cash flow of the business is probably going to answer that question before anything else.
Understand. Okay. Let's see. Are there any industries right now that more than likely are going to have a really hard time and probably are just not going to get approved? Just blanket, declines based on industries.
That goes up and down, and really the difference in industry approval within how do you say it? The difference between industry approval is based on the lender.
Okay.
So it's funny. I always try to explain what industries are liked and not by discussing shrimp. And I know that sounds really funny, but I love shrimp. Do you like shrimp?
I love shrimp. Yes.
You love shrimp. Okay. I love shrimp, but this is the problem. When I was in my 40s, I became allergic to shrimp.
Oh.
So although I love shrimp, I'm allergic to shrimp. Well, that means as a bank that I have eaten so much shrimp that the government says your portfolio is too heavy. You really shouldn't lend in that industry anymore. And that happens a lot of times with hotels, daycares, gas stations, just different things. People, their portfolio get a little heavy on the shrimp and they become allergic to it. Other people just don't like shrimp. Okay. I don't know why anybody wouldn't, but I know people that don't like shrimp. Well, they just don't like it. So they may not like restaurants because they just don't like them. So it's just sort of you have to ask your lender, do you like this industry? The SBA does not say you cannot lend to an industry.
Okay.
So post-COVID, I'm lending on restaurants. Am I lending on every restaurant? No, but I am lending on restaurants that have minimal risk with good experienced operators, with franchises, whereas I'm not sure if I could get approved to start up 180 seat fine dining restaurant right now.
I understand.
So it's all based on shrimp.
That's a good response. I like that. So can you kind of just paint the picture, like from start to finish? What does it look like for someone, a new applicant looking to start with an SBA loan, timeline, and just the whole process? What would that look like?
So the timeline is probably the most important piece. I would probably have to tell borrowers, please be patient and understand that they are only on the front side and there's pieces behind. But the relation of the process for SBA loans, I've always broken into explaining the same way I explain pregnancy, 3 trimesters. Everybody goes through 3 trimesters to give birth, and you're now giving birth to a business. Mm-hmm. So the first trimester for an SBA loan is the pre-screen process. That is the documentation gathering process.
Okay.
That's where I want to make a cake, but I can't make a cake without all the borrower's information.
Understand.
It's a very grueling process. They don't want to give all the tax returns. Give me a resume, your bank statements, your driver's license. It seems very intensive on the paperwork. That's the first phase. Once you get past that, then you move into underwriting.
Okay.
Typically, if you've got a complete package, underwriting is pretty smooth. And I mean everywhere. I've worked at multiple locations. The hardest part is getting through the first trimester.
To gather all the...
Get more morning sickness.
Yeah.
People call, why do I have to do this? Because it's a part of the process. I didn't make it. I just followed the rules.
Right.
So in the underwriting process, this is where the underwriter formally goes through and they create the formal documentation to present for approval. Mm-hmm. Some people have a committee. Our bank works with a credit manager. So my credit manager would get the file, he approves it or declines it. If it's approved, then you move into the third trimester, which is closing. And the way I tell everybody is, we will close usually within 5 days of receiving the last piece of information. Not all but 3 pieces, but the last piece of information. It's very regulated. Everybody wants it like this. Right. I want my money. Why it's taking so long? I don't know. You don't have your insurance in place. What's taking so long? We don't have your life insurance. What's taking so long? I don't know. Your contractor hasn't gotten us the information for the construction. So usually we're waiting on somebody else. It's not necessarily the lender. It's somewhere a gap in all the people that are involved.
Got it. Thank you for that. So you just opened up a question for me. You mentioned insurance. So what kind of insurance is required? You said it sounds like there's 2 types of insurance. If you can elaborate on that.
Yeah, in the closing process, there's multiple types of insurance. So if you have a business and no building, you're looking at your liability, your workman's comp, all the insurances for an operation. Typically on SBA, and I think it's becoming more and more prevalent, is a lot of lenders, especially with following the COVID outbreak and what happened, is a lot of lenders are trying to add business interruption insurance for 6 months. I know multiple lenders, including ourselves, that have really moved to that. So it's something that's being sought out after. If you purchase a building, you've got commercial real estate insurance. So it could be wind if you're in California, it could be earthquake coverage, it could be flood coverage. So you've got all that piece. And then if there's a lack in collateral on the loan, which like I said, SBA does a lot of lack of collateral, then the SBA highly regulates that we require a life insurance policy that is assignable to the bank.
Okay.
So it's the beneficiary can still be your spouse, your sibling, your parents, but we are the assigned. So if something happens during that time, it's just an extra policy that would pay off the loan and leave whoever the benefactor is a business free and clear of government debt.
Very good.
Those are the most common. Every now and then you're going to throw in disability insurance or something else. If you've got vehicles, you are required to have car insurance.
Sure.
You just got to be insured.
Right. Awesome. Okay. Can you tell us just a little bit more just about Dogwood State Bank and, how can people get in touch with you, Dee?
Oh, thank you so much for asking. So Dogwood State Bank, I'm really happy to be here. We're based out of the Carolinas. We were initially funded when we purchased another banking institution. We've just recapitalized again, and we're going gangbusters. We have a very small, dedicated SBA department. I feel like I'm at home. I'm actually working with people that I used to work with in 2005 and 2006 and 2007. and when we were all part of the Buncle Bubbler group, and we work like a great team. You can always reach me at 813-714-3960 on Dogwood State Bank website. You can email me, and I'm always known as the SBA Queen, just something I sort of dubbed myself many years ago, because many people will say, oh, you're a banker, but I'm not. I really don't know much about the banking products,
Mhm.
because really all I do is focus 100% on producing and working with small business owners on SBA loans.
Gotcha. Well, Dee, thank you so much for your time and your experience and wisdom and all the information that you shared with us today. Is there anything you'd like to add and say, to the audience listening? Whether it's about SBA loans or about just business in general. Any other words of wisdom you'd like to share?
In a post-COVID era, I have to say adaptation and patience are probably going to be the most utilized aspects of a personality. Please be patient. And in any SBA loan, patience, and be prepared to provide a lot of paperwork and never give up on your dreams. I love seeing people, and sometimes it takes them a long time to achieve their dreams. I've worked with people who've looked 3 years to buy a business and finally found the right one. Um, Going back to that whole baby analogy, not everybody gets pregnant on the first try.
Right, right.
You have to go through in vitro fertilization, and sometimes that's what it takes. Just let the path lead and see what happens, and keep your eyes open along the way, because you never know what you might find.
So patience in the process and don't give up on your dreams.
Never give up.
Awesome. Awesome. Well, again, thank you, Dee. I really
Thank you.
appreciate you taking the time. Wow. Wow. I mean, this was an amazing, amazing, amazing time that we got to spend with Denise today. If you are still watching this video, please comment and like, and in the description, I'm definitely going to be putting a link to contact Denise. Make sure you mention Sebastian Boyer, the approved guy. If you call her or you reach out to her directly, of course you can reach out to me, and I'll start with an assessment of your credit, help you make sure you qualify before you even get started with your SBA journey. But Denise is one of the best SBA people that I know of, that is really cares about her clients, and she takes the time to help you. So these are the type of banks and lenders that I partner with, that I'm going to be connecting you to when you reach out to me. And so ultimately, definitely, again, like, share, comment, subscribe to the channel, guys. I really appreciate your support, and make it a great life.